Like that.
Thank you again, everybody, for joining us on the Zoom tonight. Tonight is Tuesday, March 4th, and we are presenting the Garden City Industrial Complex number 2, our third acquisition in this market. Extremely exciting project that we have coming up, and we should be closing. We're about two to 3 weeks away from closing on this. So quick timeline. Here we go. Thank you again, everyone, for joining. Let's dive in. So agenda of tonight, we're gonna go over the industrial flex, why we choose that as our investment asset class. We'll talk about the markets. We'll talk about the market specifically to industrial, why this deal. We'll go over the investment highlights, returns, timeline, and then we'll open it up for question and answer. As in all investments, we do have to have a disclaimer, just talking about that past performance doesn't guarantee the future performance of this deal, and do your own due diligence. So why do we choose industrial storage as our asset class? Over the past couple of years, this industrial product has really become a driving factor in the economy, as well as one of the, it's really kind of stood up as a resilient asset class. So we've just been investing in these types of multi-tenant industrial facility properties throughout the country. There is a ease of management, where it's not as intensive as the multifamily per se, as well as stability with tenants, longer term leases, and just with the amount of work that these industrial companies and tenants have, there's more of a resiliency that we see as strong, or we see stronger than multifamily, as well as you're more protected from the where if someone stops paying, they're not going to be protected by the government to remain in the facility. You can kind of get them out quicker. So that is obviously a positive to industrial storage. And then we're able to kind of project what the lease rates will be, what the income will be at the asset, where we have automatic annual increases worked into the leases. Why do we like Savannah? Savannah is an absolutely incredible market with lots of companies moving in, with the with the Port of Savannah. The Port Wentworth is one of the biggest demand drivers in this market. You have an international airport, you have rail, trucking, one of the biggest highways, highway transportation, I-95, which runs from North Maine all the way down, or the Canadian border, all the way down to Miami. That runs through Savannah on the I believe it's on the western side of Savannah, and the you have the rail, the highway, the port, which gets you to ocean, ship transport, all of that, and basically gets throughout the world. And then you have Hyundai opening up their electric car plant. That's a $7 billion investment into the market. So with all that driving this market, it's busy, and there's a lot of contractors and a lot of need for this product. Let's see. The Savannah Port for industry is it's the number one most logistically friendly city in the nation, which is very it's very good for this asset. As we were talking before, we have rail access, CSX transportation, as well as the Norfolk Southern Railroad with Class 1 service. With terminals, you have the port, the shipping terminal, all of that. You have interstate access, and really you can access most of the country within one day of coming out of the Port of Savannah. So it makes this location even more desirable. Investment highlights, this asset specifically is this investment is a new build acquisition, or a 2007 build operating asset, 100% occupied acquisition on one lot, and then there's two other lots of vacant land level that we're going to be developing 40,000 square feet of new industrial flex facilities. So and that's each lot is an acre, and each acre is going to get a 20,000 square foot development. So the current ownership of the operating asset is currently getting 4% annual increases, and we expect to continue that in this market. So the investment summary here, the acquisition is a total acquisition and development is a $9 million acquisition. We're going to be raising $3 million for this deal. The debt is we're estimating it to be 70% loan to value with a 7.5% interest rate fixed for 5 years. There is going to be a 24-month IO period that we're discussing, and we're also talking at rates below 7.5, which is what we underwrote at. The current income that we walk into $15,000 a month, $180,000 annually on triple net lease, and that is that's in place already at the asset with stable tenants. The average rent at that asset is about just under $15 a foot, and the market rent is we're getting $16 a foot at other assets locally to a little farther away from the port, but $16 a foot is what we're budgeting in our projections. So the returns that we're seeing on this deal is we base all our underwriting on a 5-year hold. So we look to have investor money returned to the investors by year 5. And based on a 5-year hold, we're getting an AAR of over 27%. We're getting a total return on investment equal to 138%, which that's phenomenal for a 5-year investment. We have an IRR of just under 20%. The cash on cash flow is detailed out below, 0.6578, which is phenomenal for an investment nowadays. $100,000 investment will yield a $238,000. We're projecting a $238,000 return over the 5 years. This is kind of more of the underwriting, just so you can see it. And then so why invest in this investment? We call it GCIC 02, which stands for Garden City Industrial Complex number 2. The location is absolutely incredible. You're about a mile and a half to one of the main gates to the port. I believe it's gate 4, gate 4 or gate 5. You're also very strategically located to the airport, so your location is absolutely incredible. Currently, we're at 100% occupancy in the existing building that we're taking over. We're taking over those 2 leases. Then there's obviously the development opportunity, which is we're projecting 40,000 square feet between 2 lots. And then all triple net leases, which triple net leases, basically it's, one of the best lease, one of the most highly sought after leases in this real estate investing industry, just because you essentially take all of your expenses and you transfer it over to the tenant. So you're kind of hedging yourself with these triple net leases. The rent roll currently in place is shown below. These are the tenants. You can see that this is basically what we're going through. You have their annual base rent, you have their square foot rent, and then the CAM charges are also shown. The CAM is the triple net, which is over $16 a square foot average. So the deal timeline is we're presenting the investment opportunity today. It's March 4th. We started this yesterday. It is a 506c syndication. We'd love to get you in. You do have to be an accredited investor to get in on this deal. The starting investment is $100,000 is initially what we're looking for. Investments do come in on a first come, first served basis. The closing, we're looking at a March 25th closing. So this funds must be wired probably by the 21st is what we're looking at. So yeah, first come, first serve. So secure your spot. reach out to one of the the operators, and yeah, get involved in the deal. Let's see. The experience matters. I have about 20 years in real estate in construction. I'm the senior operator, or one of the senior operators on this deal. Over 100,000 square feet of industrial under management, 1,000 units, 6 markets across the country. We have about 12 deals today that we're involved in or operating. So we have, as you can see on that little note, we have similar deals in the same city, returning and exceeding the 3-year business plan in the first year. So this is a map of the area. 5134 Augusta is the address, and as you can see, the port is literally in the backyard. So the location is, you can't beat it, right? And you know, when they say location in real estate, this is a perfect example. So thank you again for joining us tonight, and yeah, we'll open it up for question and answer. If you want to just either raise your hand or just unmute and ask away. Anyone have any questions?
Hey, John, can you hear me?
Yep. Who's this?
It's Zach Zegas. Sorry.
Zach, what's going on?
Hey, how are you, bud?
Good. How you doing? Thanks for
Good.
joining us.
No problem. I missed the first part of
Yep.
your presentation. So you're building 40,000 square feet in addition to the current structure?
Yes.
What's the basis on the land on the
Um,
additional?
we're getting the 2 acres for about 1.3 million.
Okay.
And the development for the 40,000 square feet is, we're budgeting $4 million.
Okay.
But so basically we'd be able to get into this acquisition for a $3 million raise. We we get in with $3 million. We grow the value. We put 4 million into it, and we grow the value to $12 million.
Okay.
So
Has the seller ever got a site plan approval or anything on the additional land, or this is just preliminary?
we're working on the site plan. Zoning is C2, and C2 is storage is allowed on C2.
Yeah, it's heavy commercial. This is Garden City.
Yes.
Okay. I think that's it for me.
Awesome. Thanks,
I
Zach.
appreciate it. Thank you.
Any other questions?
I'm sure you will, John, but can you email us all the recording on this or put it where we can access it? I've got some people interested that weren't able to join tonight.
Yeah, absolutely. We'll be sending out the slides and the recording.
Thank you.
Thanks, Trevor. Alright. Well, thank you again for joining us. And we reach out to one of the GPs to get in on the deal.